What's going on, everyone? My name is Nicholas Merton here at Data Dash, and today is May 15th of 2020. Well, folks, I hope you all are having a fantastic day wherever you are, and in today's video, I not only want to spend a little bit of time to talk about cryptocurrency markets, but really spend a good chunk of time diving into a wide range analysis over commodity markets. We want to take a look at uranium markets that have had a huge leap up as of recent due to the recent quarantine across the globe. Along with that as well, a lot of support for precious metals from gold to silver, and also taking a look at a variety of other industries such as oil and natural gas and solar. So we're going to be doing a full sweep analysis across these industries, and also towards the end of the video we have a sponsored interview with Lenin.io. So let's go ahead, we'll dive into this analysis, starting off by taking a look across the board for crypto markets. As we can see over the last 24 hours, the vast majority of cryptocurrencies are in a no trend scenario between 1 to 2% to the upside or downside. We do have some plays here picking up steam. I may say go getting a nice little leap up here, 36% as they got an announcement to be listed on Coinbase. But I want to go ahead, we'll take a look at Bitcoin. Nothing has changed in regards to when we last talked. If we take a look at the hourly, price is holding relatively close to the highs here, just a few $100 down. But if we take a look at the daily chart here, it looks like we're very much on pace. I probably just have to adjust that to the logarithmic. You can see here we're pressing up against that resistance. That's why we had the shot down here. And now we're looking like we might be able to push through. If we do get a close above there by the end of today or tomorrow, really over the next week, this is going to be really big news, guys, because what that's going to mean is we're going to be going to around $11,000 most likely. It's really probably the next significant price range, and that we're going to be pushing sideways along this line of resistance and make it new support. So nothing has really, again, been adjusted from that prediction that we've had here on the channel ever since we held the $8,500 level. All right, so I want to go ahead and talk about one of your guys' favorites, because I know we did the episode a long time ago, Uranium Fever, and that was my kind of broad analysis back, and I think it was probably the summer or later part of 2018, where I started to really take on a more bullish narrative towards uranium markets. And that was back here, again, back here on the chart, around $20 per pound here. So now we're at this position here where uranium has now finally broken. We wrote about in our newsletter here how we broke out above $30 in this case for uranium futures contracts. And now we're sitting around $33.45. So in this case, we've had a huge rally from about $24 up here to $33. A pretty massive leap here for a commodity like uranium. And most importantly, breaking out of this ascending triangle. So what does this mean? To me, it means that the industry is getting very close to formulating a significant bottom. And in fact, many people probably say that the bottom is in, because we set it down here around $17 to $18. And now we've not only had multiple higher lows, as we've been pointing out multiple times again in our newsletter, and even here on the channel we talked about as we set the higher low back here in April of 2018, or excuse me, in April 2018, as we talked about it later on. We can see now that we've broken up against the line of resistance here with some of these higher significant lows where we had resistance here, consistent prices, and now it looks like we're kicking off a trend. Now, is there a very good chance that we could come down here, probably rest on support, or excuse me, rest on previous resistance and make it support? Yeah, there's a chance that could happen, and probably we would see, you know, maybe uranium cool off for the next 3 or 4 months, no pun intended. But all in all, I have to say the kind of rebound we've been seeing in equities for these companies, for example, like Uranium Energy Corp, which has been one of our picks in the newsletter for some time. I mean, this has been incredible price action. I think when we first started talking about it was probably around 50 cents, 50, 60 cents. And now we're starting to see UEC up here around $1, where most equities right now are still down 20-30%, especially if you're talking about the broader energy sector. You're probably talking about 50 to 60%. So really awesome price action to see here. We came down to our target range here where we saw the bottom down here in 2008. So it could be very well that the industry has seen a bottom and that equities are starting to correlate with that bottoming in the actual underlying commodity. And you can see this in the broader ETFs as well. If we just take a look at URA, URA is a little bit too broad in some cases, in the sense that it has a lot of different companies that sometimes aren't as heavily exposed to uranium. We can see here that we went all the way from $7 up here towards $11. You can take a look at Cameco, sorry, at CCJ. See a rebound here from $5.40 all the way up to $11.27. So almost a near doubling in regards to the stock in just a matter of a couple of weeks, really in a matter of about 2 months. and now we're finally starting to get a little bit of a pullback here. So this is where I'm watching some of these equities. Right, as we have the Fed stimulus going on, a lot of companies are going to be bought up, and a lot of people I think are actually going to be looking for some fundamental plays that have been way oversold. So I'm going to be keeping an eye on not only Cameco and UEC, but generally just the whole uranium sector. I don't trade futures contracts like this. And plus, if I think that there's going to be a move in price in the commodity, I tend to want to trade the equities underlying, because the equities usually move a little bit faster. That's very true with like gold miners, for example. So anyways, just letting you all know, I wanted to share this because I think we had talked about it a very long period of time ago and stuff. We really haven't been visiting uranium as much as we used to, because we've been waiting for this breakout. We finally got it here in the month of April. So I'm really excited to see the follow through here in May. Now, going on next to taking a look here at oil markets. Oil finally, after going into negative territory, looks like it might finally start to be moving up towards higher prices. I want to go ahead here and bring it here to the weekly. And we can see for the last few weeks, we've been going from around, the low the low double-digit ranges from $15 to $20, now upwards towards around $28.27, and it looks like we're probably going to continue maintaining the uptrend all the way up here to about $40. Now, I don't really think that enough demand is going to justify holding prices there. What I think's happening is that a lot of people are going to buy oil, trade oil futures, push the price higher in anticipation for an OPEC meeting this summer, in the early part of the summer here, so in about a month or two. Now, as you can take a look here, we can see we're on the weekly, and I think that, again, it's playing into that thesis. It's going to push up here to June and July, and after that, we're going to get a correction backwards. But abroad in the commodity space, I want to make a clear point here. Whether it be oil, whether it be natural gas, whether it be uranium, whether it be precious metals like gold and silver, we're going to see commodities win out here in the short term. I think the follow-through is really going to come through in gold and silver and precious metals, as the store of value and the hedge kind of play is really afoot right now in regards to global equities. But again, keeping an eye here, this is what we want to see come up here back to 40. And the general theory that I have, and I've had for a very long period of time, as I mentioned here, I've talked about this since 2018. People thought I was crazy thinking oil would go down to $20. I can't even imagine what their mindset is now, thinking that it went down negative territory, but I digress. The major thing is that we're going to probably be pushing in this sideways channel for a very long period of time, between 20 to 40 bucks. Oil is going to remain cheap for a very long period of time, in my opinion. It's going to be a very prolonged period of time before we actually break out above this resistance and actually start to go towards higher levels. So again, I don't think we're going to be seeing $75, $100 a barrel in a very, very long time. Next up is natural gas. Natural gas is probably one of the most easy ones to generally get a prediction or a reading on, as it's got a descending channel that it's been in since 2009. And you can see the descending lows, the descending highs. Now, my general thesis would be for this to come down and touch down here around $1.10 per CFD contract, a contract for difference for natural gas. I don't know if that's going to happen. Quite frankly, I think that it holding here for the last 3 months at this previous low is kind of similar to what we happened back here, where we did have about a month or two when we went down below to new lows. But roughly speaking, if you bought the lows here from the previous low in 2009, you picked the bottom, generally speaking, right? You didn't get the absolute bottom, but you pretty much got the bottom range of the cycle. And I think that that's what's going to possibly play here, where I think the chances of this going down to $1.10 per CFD is quite unlikely. It's just my take on it, as I'm taking a look at this from a technical perspective. And not to mention the upside volume here from last month in April was really good. We wrote about this all in the newsletter. This is the dialogue we wrote, kind of analyzing the market here. Because again, you can either, I'm not saying you guys should go long on this or anything. I haven't taken a position yet. But if I were to just analyze this as a straight commodity itself, or trade companies that were, producing natural gas, right? The economy is reopening now. You've got cuts coming soon in regards to a large players like OPEC, a lot of U.S., Canadian producers who are producing a lot of natural gas, as well as Russia, having to finally come to the table and start talking about making some serious cuts. No one can really either foster, profit or really do well in this environment. So I think that eventually someone is going to have to take the bad blood and cut production, which is going to lead prices higher as the economy starts to reopen. We'll get more demand, therefore setting a possibility for prices to make a steady rebound. Now, Do I think we were going to reach up to this range anytime soon? No. It's going to be sometime into the late 2020s when the economy is actually recovered to some degree. Next up, I want to talk about solar. Solar is one of my favorite industries. I like solar technology. It was one of the first industries that I ever started trading, and I traded a lot. Back in the day and stuff, I traded a lot of solar stocks. One of the big ones and stuff that I traded was back here during this time period where solar revisited back to the highs, and it was Canadian Solar. And there's a lot of different companies. I've been looking at I have them in my list here. I've got like Enphase. I've also got CSIQ, as I mentioned. We've got SunPower Inc., and then we also have SolarEdge, Vivian Solar, Sunrun. There's a lot of different companies. The thing I don't like here is the inconsistencies in the chart, the pure volatility that's in the industry. Now, I do like volatility, but I like to kind of trade these things for the next coming few months to the next year. And quite frankly, the trends have been inconsistent. I would have liked to see us come down and touch this line. I don't think we're going to see that, but I want to start to see where price can actually pick up some direction, because we just were at $42 for the ETF for TAN. Then we went to $21. Now we're at $30. I don't really know what to make of this. I mean, if you honestly can tell me in the description, guys, or in the comments, what you think about this chart, I'll be honest, it looks like it might just actually come up and touch to $47, especially with Fed printing. But I don't like the follow through of the volume. Nothing like what we had back over here. So it's been inconsistent. I'm going to wait until we push sideways a little bit and then start to actually make more directional moves. All right. So 3 last charts to look at. Gold doing perfectly fine. Again, came down on the line of resistance as we talked about for a long period of time, made it support, as you can see, for over 4 months, and then we started to charge higher, and we're pushing towards relative highs that we haven't seen since back here in 2012. Really exciting, back here in 2012. Really exciting to see. I like seeing this in price. Take a look at the monthly. It becomes even more clear that we are in a very, very clear bull market. Take a look at gold and other currencies. We're breaking to all-time highs. Gold to the Australian dollar, gold to the Canadian dollar. A lot of other currencies across the world. Gold is at all-time highs, and it's going to come very soon for the dollar as the Fed continues to print excessive amounts of money. Now, what's even more exciting is the rebound in silver after its pretty dramatic sell-off during the liquidity crisis we had back in March, where everyone was covering their positions during the sell-off for COVID. Now we can see here that we're around $16.20 per ounce. Now, silver's chart alone would be really interesting to take a look at here in the monthly, because it's already signaling, just like we did back here, that we're outside of the line of resistance and that we're going to be charging higher in prices. But I don't think this is telling enough, right? It's nice enough to look at the chart here, but the thing that we like to look at is the gold to silver ratio. Now I'm going to go ahead, jump over to the monthly chart here to make this even more clear. As you can see, with every, or I wouldn't say with every commodity cycle, I will take that back. I'll say with the last commodity cycle, because we don't have an extensive range of data to work with, so where I could really make that statement so confidently for every cycle. But for the last cycle, what we had during 2008 is we actually had gold and silver selling off. But what had happened was that silver had sold off more than gold, as it's a smaller market. It not only takes on higher losses, but it also has higher gains. And this is a point that I always like to bring up about watching the gold to silver ratio and why it's significant. Not so much at the level where it's at, but the increase for a matter of 4 months that we saw in the gold to silver ratio, where gold gained. So basically it went up from about 52 to 83. This means that for every ounce of gold, you could buy 83 ounces of silver at this range. What happened was that we then afterwards had the beginning of the commodity cycle, where from December of 2008 down here around April of 2011, and you can go look at the charts, that's where silver kicked off its cycle as well as gold, but it heavily outpaced gold in this case. And that's why the ratio dropped from 83 downward here towards 32. And now look at what's happening here, right? We had the technical pattern and the breakout, and now we're starting to see a pretty substantial reversal with a peak here of around 126 for the ratio, downward here towards around 106. What do you think this is repeating here? I think it's repeating back here. It's the same exact kind of price action, not exactly in the sense of like the technical formation, right? But you can see we had a technical coiling of price, breakout, significant rally, more significant than we'd ever seen throughout the entire rally back here. And now we're getting the pullback. at historically high ranges for the gold to silver ratio. If anything, I'm placing my bets here on silver in the short term. So going through all these commodities, right, because we still have to jump over to our interview with Lenin.io, I want to go ahead and summarize this real quick so you guys can have some takeaways. Silver, my top commodity right now. I'd say gold is my second favorite. Outside of that, I'd really be looking right now at uranium. I think that uranium is going to have a safe bet here during this period of quarantine, as the demand for residential energy is going to be just as consistent as ever. Not to mention, we have a lot of cuts coming to a lot of the producers, and those won't be coming back for a very long period of time. After that, I would say oil and natural gas are my next best bets, and then the solar sector. Really just doesn't look like it's consistent right now in its trend. As much as I love solar energy personally, I'm going to be waiting for quite some time. All right, so these are the commodity markets that we watch. We do a broad umbrella analysis. And if you guys kind of like things like this, feel free to check out our newsletter. This is where we really do a lot of in-depth analysis on traditional markets as well as commodities, as we take a look at equities, commodities, as well as Forex markets and cryptocurrencies. So a full sweep analysis. It's a great way to support the channel if you guys want to consider it, but no pressure if you don't want to. That all being realized, though, thank you all so much for watching. Let's go ahead and dive into this interview with Lenin.io. Alrighty, everyone. So in today's sponsored interview, I'm sitting down with two really awesome guys in the cryptocurrency space who come from two very powerful companies in the cryptocurrency industry. I'm not only sitting down with Adam, who is one of the co-founders of Lenin.io, alongside Mauricio, who we've had on the channel beforehand. And along with that, we've got Matthew, who is the VP of Originations for Genesis. Now, as you guys can probably tell, these are two well-known companies in the space, and I'm really excited to get some conversation going between these two guys, as there's a really interesting partnership between these two respected companies in the space. But I want to start by saying thank you guys for both making the time. I appreciate having you both on.
Thanks a lot, Nick.
My pleasure.
Awesome. So I want to start off with some of the big news here, because I know from Lenin's business model, you guys have been working on providing, in this case, a way for people to earn interest on their Bitcoin and also increase their Bitcoin exposure, take dollar-backed loans on their Bitcoin. There's a lot of services that you guys have offered alongside many of the other lending pools in the cryptocurrency space. But I think you guys are taking up to the next step here for Lenin's overall business model. So I want to go ahead and let you guys take it away with the announcement. It's got me really excited, and I'm excited for people to hear about it as well.
Cool, awesome. Thanks a lot, Nick. I'll kick it off. So Adam speaking here. So really what we're launching today is a USDC account. And the key thing here, in comparison to other savings accounts in the market, when we wanted to go to market with it, we wanted to be super clear on who our partners were for borrowing that, because naturally people want to know where their coins are being held and how they're being used. So we thought really long and hard about how we could set this up, and we've known the Genesis team for about a year now, and worked closely with them on other products that we've launched, and thought, if we can be clear with who the counterparties are on the borrower, that adds a lot of credibility to the product in the market, and it's really a first of its kind in providing that relationship. So when we kick that off, and really users of the account have the certainty that they understand that relationship, and it really allows a bridge. So it allows people of any amount to deposit into the account, any size. There's no minimums, and really linking with that experience that really only institutions have access to today. So we want to make the account super flexible, super easy to use. There's no minimum deposit, as I mentioned. There's no minimum term, and you start earning as soon as you jump in. So want to set that up, and I'm sure you're all curious to know a little bit more about Genesis and how what they do with the coins, and more about their team. So I'll pass it off to Matt to explain that background, but that's the premise of it.
Hey guys, you have Matt here from Genesis. We're super excited to partner with Adam and the team at Lenin on this initiative. So a little background about Genesis. We're one of the kind of longest standing digital currency trading and lending firms in the space. We've been around since 2013, really, and we're really the first trading desk and real institutional focused trading desk in the space. We're wholly owned by a company called Digital Currency Group. So they're one of the largest venture capital investors, led by Barry Silbert, based out of New York. And Genesis is wholly owned by DCG. So Genesis, in addition to its trading desk, also started a lending business back in March of 2018. And we quickly became one of the largest kind of institutional lenders in digital currencies. We started more on the Bitcoin lending side, but that quickly kind of transitioned into lending both stablecoins, so USDC, PAX, and others, along with Bitcoin as well. We've done roughly $6 billion in originations since inception. We are probably the largest lender today, and our active loan book right now is just shy of $1 billion in terms of active loans outstanding. So we're really the largest institutional lender, and we think the partnership with Lenin is going to be great, as it's going to kind of give us, basically access to increase our reserves and our supply to continue facilitating our business, while at the same time, bring a lot of good liquidity to Lenin's platform early on.
Yeah, absolutely. Just to build on what you were saying there, Matthew, and I don't mean to sound like a kiss up. I'm a big fan of, honestly, Genesis and a lot of these companies, as you mentioned, that have been supported by Digital Currency Group. I know you guys have been around for a very long period of time, and that made me really confident to hear that you and Lenin were working together, because I think I see a really good kind of synergy between the two companies with, for example, as you mentioned, Genesis's longstanding history and doing trading and lending services within the cryptocurrency space. I think it's going to bring a lot of experience, in this case, to a company that's passionate like Lenin and expanding out to a broader market. And speaking about that, I want to talk a little bit about how Lenin is really putting a big emphasis on helping emerging markets. I think that there's a huge opportunity here. I mean, we kind of focus, I think, on mostly Western markets for the most part and developing economies, but I think in underdeveloped regions or developing economies, I think there's a lot of really exciting potential here for being able to offer a USDC stablecoin account that not only gives you the exposure of dollars to a wide range of people across the world, but also high rate of interest that beats out any other standard bank account in the United States, at least from the major banking giants here in the US.
Yeah, I mean, so I guess some emphasis on who our current client base is, but over half of our customers are outside of North America right now, and we have a huge customer base in Latin America, and that's really in premise. The co-founder of Lenin is Mauricio. He's originally from Venezuela, so through his network there, as well as our partners in that region, we've been growing very quickly. And as you said correctly, Nick, it's really out of a need. So I always say the hardest thing to explain digital currencies to is someone, not to be too much of an ageist, but someone over 40 in Canada, the US, because they just never struggled with the inflation that many other countries experience. And actually with Lenin's team, I was actually the only one that was born in Canada, and the rest of the teams from all over the world. So a lot of things with currency devaluation are quite obvious to people in developing regions. And really what we want to do with the USDC account was get rid of all the friction that is typically encountered when setting up an account that is USD or an other stable currency based. And you can set an account up in 2 minutes and have a USD backed account going, earning interest immediately.
Yeah, absolutely. I think what you guys are offering is, and I've gone through the actual user experience of applying for example, a Bitcoin loan or putting in your Bitcoin into a Bitcoin savings account on Lenin. And it's very simple, but I think what's amazing even more is for, as you mentioned, those people who could be in a completely distant country where it would take so much work to get an account in the United States or in another country to get exposure to that currency. Just to be able to do that in a digital interface and making it a few simple steps, I think is incredible. And I think it's why right now what we're seeing with, whether you want to call it decentralized finance or centralized finance, like we're seeing a huge revolution in the crypto space and this ability to digitize dollars and be able to put them in these high interest earning opportunities. So I am a little bit curious, as you guys mentioned before, to hear a little bit about more of the relationship between you two in this case, because it seems like there's a lot of working power between you guys to do some really great things. But I'm curious, Matthew, what are you guys kind of bringing to the table here for Lenin and stuff? I understand you guys have a lot of experience. What areas do you guys feel that you helped Lenin a lot in regards to this partnership?
Yeah, absolutely, Nick. It's a great question. And I think it's a few things. One is just kind of experience navigating these markets. So we've obviously, been doing this, for over 2 years now. And so we kind of know what that market structure looks like, who the borrowers are, which I'll get into in a little bit. What kind of the average kind of rates are in the space, and how to really take capital and basically deploy it in a way that makes a lot of sense from a risk adjusted perspective. And I'll get a little bit more into how we think about risk as well. So just kind of tenor in these markets, I think is the first point. The second is just kind of the size and scale at which we operate. So Lenin starting out, we obviously hope that the platform really gains traction because we think that we can kind of immediately take that amount of deposits and kind of deploy them at really great yields for Lenin users. And so, like I said, our loan book right now is roughly 900 million, close to a billion in terms of active loans outstanding. And we've done, billions in origination since we've incepted. And so we expect that growth to continue. And so we think we're going to be able to really take deposits, place them, pretty seamlessly into the market at really great yields, on both, the USDC side and also BTC side. So I'd say, tenor, the size and scale, and then lastly, our risk management. And so, we pride ourselves on facing no capital losses, zero defaults or delinquencies since our inception in March of 2018,
Really?
Even with our growth. And so, one of the biggest investment areas for Genesis is our risk management kind of philosophy, framework, and system. We've kind of taken, obviously we take it very seriously. We have a great kind of leadership team on our risk side. And so, the first thing there is we really only deal with institutional counterparties. And some of our counterparties have been kind of dealing with us for the last, 2 to 3 years. And so we've built up a degree of trust. We know their management teams, we know their balance sheets. And so we conduct like a very intimate, underwriting process on everybody that we're lending to. And because we're kind of an institutional focused firm, we're only really dealing with 50 to 60 or so active counterparties. So, we're not having to go underwrite, smaller size loans with counterparties we don't know well, but rather spending a lot of time really understanding the strategies of the firms we're facing and the teams and kind of their risk frameworks. Yeah. And so, along with kind of that underwriting process, then we also kind of have automated tools to kind of utilize around us to manage margin calling and top ups and liquidations and things like that. And so, the combination of, those long-standing relationships along with like really good technology to kind of manage margin and top ups, we've been really successful in kind of maintaining, no capital losses or defaults, even through some of the most volatile times, that we've seen in the last, obviously, few months.
Good stuff, man. I think it's a lot of accolades, but I think one thing you mentioned that stood out to me that I've always tried to drill to people is that when it comes to doing these lending and borrowing operations in the cryptocurrency space, it's a constant game of balancing the books. And that's a very difficult thing to do, as you mentioned, where you said you have to make sure you have the equal amount of borrowers on the other side to make sure that you can protect those yields for savers. I think it's a very, and not to mention as well, you're providing great rates for borrowers, I think, if they keep coming back and they can get very quick access to capital. All they have to do is lock up the equivalent collateral in crypto or some other form. And I think that's an amazing model where you provide very instant liquidity to borrowers at good rates. Along with that as well, you provide those steady savings rates where you're really passing on the majority of the returns to the end consumer, in this case, who's putting money in one of the accounts. So again, I think that's very much a difficult challenge, and I could see how you guys would add a lot of value in that sense over to Lenin in this case. So I'm curious in this case to bounce back to you, Adam, and the long scheme of things, you guys are doing USDC right now. Are you looking to expand out to other stable coins at the current moment? And also, who can get access to this system that you have? I know, for example, your Bitcoin programs and stuff are quite open, but I'm just curious about what kind of users geographically could actually get access to this service.
Yeah, I appreciate the question. So the geographical pieces are exactly the same as our Bitcoin savings account. And with that too, it's also worth highlighting that not only will Genesis be our partner on the USDC side, they'll also be our partner on the Bitcoin side. So depositors have the certainty that relationship is set up there as well. So the only restrictions on both accounts is sanctioned countries, as well as 6 U.S. states that require certain licensing for cryptocurrency. So all to say, very open globally with very, very limited restrictions.
Awesome, guys. That's really exciting to hear. So for those who might want to start exploring, maybe they're getting into this whole idea of starting to earn higher rates of interest on their savings or looking into crypto-backed loans, all kinds of things of that sort that you guys offer, where would someone want to go in that case to learn more about it?
Of course. So you can sign up in 2 minutes at lenin.io. And the system, of course, runs 24/7, and we look forward to onboarding you in the coming weeks and months.
Awesome. And well, I'll go ahead and make sure to leave a link down below in the description for those of you who may be interested, so you can get your hands on maybe setting up a Lenin account and see whether or not you want to earn USDC interest, maybe earn interest on your Bitcoin, take a crypto-backed loan. I think it's amazing just how much utility services you can get that really help individuals in a financial sense. But guys, thank you all so much for making the time. I think this is a really exciting kind of bold move for the both of you, and I think I'm really interested to see how this is going to play out in regards to the crypto space, not only in the regards to being able to provide more capital to institutions in the crypto industry, but also in the sense of providing really solid yields for everyday people. That's the killer app I think that we're seeing right now over these last few years in the crypto industry. So thank you both for making the time. I really appreciate it.
Of course. Thanks so much, Nick. Thanks a lot.
Yeah, thanks for having us.